did you?
So here on the Silver Fortune channel, and indeed many other voices here on the internet, we talk a lot about the next economic downturn, the next global recession or depression, and some characteristics of what that might look like. Sometimes we get really specific. We talk about something like Deutsche Bank and the danger it poses to the entire financial system. Sometimes we zoom out a bit and we look at the bigger picture. Let's look at global debt levels, consumer debt levels, sovereign debt levels, etc. But at the end of the day, we can make some pretty good guesses as to how it's going to go down. We can make some educated assumptions as to why or exactly what will really make this crisis much worse than maybe past ones, whether that's debt levels, demographics, central bank policy, etc. But again, at the end of the day, we don't know the exacts, the specifics of exactly what this next crisis will look like. But what I want to do in this video, in this podcast today, is give you guys 6 characteristics, rules of what this next crisis will look like, and kind of flesh that topic out a bit, talk a little bit more about each of these individually. So number 1 on this list is that it's going to take longer than most expect to arrive. And I think this is absolutely evident to those of you that have followed the work of so many in this community over the last, maybe 10 years since the Great Recession, or even the last 5 years. People have been talking about the next recession, the next downturn, hyperinflation, etc. for a long time, and yet the U.S. economy and most of the global economy has kind of defied gravity, despite all of these things that should be acting as a headwind, despite all these things that should be pulling it down. It hasn't all fallen apart yet. The financial system, the economy still functions for the most part. I'm not saying it's not a fake economy, that markets aren't fake, but it's been propped up through the years for a variety of reasons. And even today in 2019, I don't want to make the error of saying, well, it's been 10 years, it's still going to arrive pretty soon here, because look at all this time that we've been waiting. Surely it's right around the corner. Again, going back to the rule I'm talking about here, and by the way, these are in no particular order, it's going to take longer than most expect to arrive. So it's hard to say. That can mean a lot of different things. Maybe if you're talking about the people who were expecting this 5 years ago, well, it's certainly taken a lot longer than they might expect. But even for those of us that are expecting it to happen, within 12 months, 24 months, it could still take longer than most expect to ultimately arrive. But, the important thing to understand here is rule number 2. It's going to unravel much faster than most expect. I think this next crisis is going to escalate faster than most people expect. And that can take a lot of different shapes and forms, whether we're talking about collapses of financial institutions, escalation of central bank easing and interest rate cuts and QE, et cetera. A great example would be the Federal Reserve and their interest rates. They're one of the maybe the only major central bank that's been able to raise their interest rates a considerable amount during this quote unquote recovery. And because of that, they have some room to lower them in response to this next crisis. And sometimes you see it in the markets, them pricing in maybe a rate cut in the next 12 months or 24 months out or something like that. But, I think the truth of the matter is that they're going to react much faster and to a much larger magnitude than many people expect, meaning it's going to unravel faster than most people expect. The stocks markets are going to fall faster. The central banks will lower interest rates faster than most people expect. And that's really, important, I think, for those of us that are invested or were otherwise watching this closely. The whole idea of waiting until the last minute to jump out of a sinking ship. Well, something like in the case of the Titanic, right? We've all seen the movie Titanic, right? Maybe not. Okay. Well, you guys remember the part where they're on the boat and somehow they get like the prime position on the boat so that they're almost like the last people to hit the almost freezing cold water, right? And then the boat goes under. The Titanic, just a massive cruise ship for its time, goes under, and it has sort of a suction effect, right? And it brings them under. Well, you don't want to be those people that get sucked under. Now, in the case of Jack and Rose, they're able to swim to the surface, but cruise ships are much larger today, and I think these crises are going to be much larger today. And you don't want to get sucked under to the point where you're not able to get to the surface in time to get another breath. So The idea here is to prepare ahead of time, because this could escalate much faster than many of us expect. Rule number 3, it won't be different this time. And what do I mean by this? Well, this is going to fly in the face of rule number 4, which I'll get to here in a second. But when I say it won't be different this time, what I mean is that there's not going to be some magical X factor that comes in to save the day, right? We've seen this play out going back to the Great Recession and afterwards, where central banks time and time again have stepped in, governments have stepped in to kind of save the day, whether it's through tax cuts or through quantitative easing, interest rate cuts. They've kind of propped up the system year after year, but that can't go on forever, and it's not going to be different this time. They're not going to somehow save the day. They're not going to break the rules of economics, which might as well be the rules of physics when it's all said and done. Now, they might be a little bit more stretchy. That's a terrible adjective to describe it, but they might be able to be stretched more than something like gravity, right? The rules of physics. But at the end of the day, you can't pull forward economic growth indefinitely and not expect to eventually have a lot of contraction within an economy, contraction within the supply of debt, or whatever we're talking about here. Eventually, it's going to end poorly, and it's not going to be different this time. There's not going to be something that comes in and saves the day at the last moment and prevents this next downturn. There'll be small things along the way that can delay it, but in the end, it's all going to kind of end as many of us expect. Now, maybe not the minute details, but it's going to end poorly, if I can make a generalization. However, rule number 4, it won't be the same as the last time. Okay, what do I mean by that? Well, it's going to end poorly, but don't use the biases of the Great Recession and the Great Financial Crisis to kind of mold your expectations for the next crisis. Meaning, if you expect this to start in the housing market, the subprime market, or something like that again, or even the United States, that's a bit of a dangerous assumption, because it very well might not. It very well could start in China and their real estate market, right? It could start in the EU, right? It could be a currency-related crisis, right? This is something Peter Schiff talks about all the time, that this next crisis, it's not going to be a equity market crisis. It's not going to be a whatever. It's going to be a sovereign currency or a sovereign debt crisis, right? So it's not going to be the same as last time. The anatomy of each recession, crisis, whatever you're going to talk about is different. There's some similarities, but it's going to be different this time around. And don't be biased by what happened last time around. Treat this like a whole nother ball game. Learn some of those lessons, but don't expect it to look exactly the same. Number 5 on this list. This is really important to understand. Economic. Geopolitical, meaning around the world, relations between countries, and then political, meaning domestic politics within an individual country, and societal changes. All of those things influence each other. If the economy is in the dumpster, then you better believe that's going to have effects on society, domestic politics, and relations between other countries, geopolitical issues. Now, what will that amount to? It's going to be different for each country. It's going to be different for, depending on how this goes down. But a great example would be, hey, if the economy crashes a year from now, that's going to put Donald Trump, if he wants to run for re-election, in a very difficult position. The next downturn, I think you can expect increased geopolitical tensions, whether it's between the U.S. and China, or maybe a smaller country like Venezuela, Iran, etc., right? Or even societal, right? The next economic downturn, I think we're going to see a lot of upheaval, riots, people on the streets upset. And all these things play out to affect each other, right? If we have this type of upheaval, societal upheaval, that might influence the political realm to choose some policy that's going to be popular over the short term. I'm talking about QE for the people, right? Let's forgive all the student loan debt, which would benefit me plenty, maybe being a grad student, but certainly not something I'm in favor of over the long term, because I see the dangers with something like that. Whatever it is to satisfy the population over the short term, right? Or in the case of something like the EU. What if Italy does something like that to satisfy their own population, but it breaks the rules of the EU, or it affects their relation with other EU member nations, right? And what will the eventual, split up of the EU, the breakdown of the EU, going to mean for, which is more of a geopolitical or political event, going to mean for the economics? So this is all, working together. And I mean, that's certainly the case now. But I think in the next downturn, the next crisis, we're going to see this all magnified. Each of these little factors will be affecting each other. And it's going to be a little bit more evident as to how societal can influence political, which can influence geopolitical, which can influence economic, which can influence societal, etc. This is a loop, right? Something very important to pay attention to. We can't just get caught up in what's the stock market doing, or what's the White House doing, or whatever, social movements. We have to all look at this as kind of an all-encompassing idea. They all influence each other. And finally, number 6 on this list, I think this relates to a lot of us that are investors or pay attention to finances, etc. There will be blood on the streets. Now, maybe not literally, although that's a very real likelihood, depending on what streets we're talking about. But I'm talking about in the financial sense, in the market sense. There will be assets that will be massively underpriced here in the future. There will be blood on the streets. Now, again, what assets will those be? Will it be stocks? Will it be real estate, precious metals, all sorts of other potential assets that could be, in this blood on the streets moment? But I think it's important to understand for those of us that are preparing for something like this to keep somewhat of an open mind when it comes to where you're going to deploy your capital, or if you're just going to kind of keep it, stash it away. I'm mostly talking about something like silver and gold here, right? If you're holding silver and gold and silver and gold are doing pretty well, and stocks are crashing, or real estate's crashing or something, maybe that's a bit of a blood on the streets moment, meaning, do you buy that dip? Well, there's risk with that. Sure, it could, the whole notion of don't catch a falling knife, or don't try to catch a falling knife, that asset could fall much, much further, but you could be getting a huge deal over the long term because the markets are overreacting to whatever is going on in this timeline, in this space that we're talking about. So keep an open mind, right? This idea of just holding on to your silver and gold until the day you die. Well, you could have some real opportunities out there, but do research, try and make wise decisions, right? Is a decision wise? Sometimes it's hard to tell until a couple of years out, or in retrospect. But that's number 6 in this blood. Blood will be on the streets, I think, in at least some assets in some cases, and that could present a huge opportunity for some people. So, again, quick recap. It's going to take longer than most people expect to arrive. It's going to unravel faster, though, than most people expect. It's not going to be different this time around. There are certain rules that I think this system has to follow, and they only can defy those rules for so long. But it's not going to be the same as last time. There's going to be some differences, or major differences, right? It's not going to be led by the same imbalances, by the same markets or whatever, even if there's some similarities, whether it's going to be a credit-driven crisis or inflation or whatever it might be. This is going to be an economic, geopolitical, political, and societal crisis. They're all going to play into each other, exacerbate each other's issues. Your job is to keep a level head and realize that there's going to be blood on the streets, financially as well as maybe literally, but certainly financially, that there could potentially be huge opportunities to be had here in this next crisis. So I hope this has been helpful to use as a guideline. Bookmark this video, share it with people that are interested in this. As always, if you have ideas for videos, topics in the future, questions that you would like answered, let me know down below in the comment section. But as always, I'd like to thank you guys all from the bottom of my heart for watching this video, listening to this podcast. For those of you guys that are in podcast world, thank you guys. I see you guys listening. And if you're watching this on YouTube, well, hey, if you prefer podcasts, which a lot of these videos are much better formatted for, check me out. I'm over on iTunes, Spotify, Google, Android, Pocket Casts, some other ones I'm forgetting off the top of my head, but certainly you can check me out over in the podcast world because I'd certainly like to grow that audience as well. So, as always, thank you guys from the bottom of my heart for watching or listening to this talk today, and God bless.